Okay, let's talk about possibly one of the most important concepts in trading that goes in line with daily bias. It goes in line with anything that is market structure and order flow. Those are all extremely important. But the power of three is something so simple, yet it's one of the most important concepts out there. And the reason why is because it's always been in front of us. If we quickly ask yourself what a bullish and a bearish candle is, usually this is the type of response that we get. This is a bullish candle, this is a bearish candle. But notice how this already tells you so much about price. And yes, by the way, this is not my image, or whatever. But this is an image that shows you exactly what the power of three is. Because I want you to notice how by drawing a bullish candlestick, people had 2 wicks and 1 body. Bearish candlestick, 2 wicks, 1 body. Let's go into price section. In price section on the daily, you see extremely few candles that do not have any wick. So many few candles that don't have any wick. All of them have a wick, 2 wicks. Right here, let's even do like this. Look, wick, my God. Wicks, like wicks. Like wicks are everywhere. What people forget is that wicks tell you a lot in price. So for example, right here, let's zoom in. This candle on the daily tells you that throughout this day, the market opened right here. This is where the market opened. The market moved up. The market moved up towards this high. This was the highest point on the specific day. And then the market moved lower, and this was the lowest point at a specific day. Right? So this tells you a lot. Basically, what the power of three is accumulation, manipulation, and distribution. And the reason why this is important is because this is exactly how the market moves. The market is always either accumulating, manipulating people, or distributing price, or distributing the asset. And what this means is that the market is going to range, it's going to manipulate, and then it's going to move in the desired direction. And in this case, what you can expect right here, and you will learn about the daily bias, our target is going to be eventually this low. So if that is the case, you expect the market to move higher to get people thinking, oh my God, the market is actually going to move higher and this was the low. So people start longing. All of this is people longing. And then eventually the market moves lower and then moves bearish. So a bearish day requires bulls to be in control for some time. That's what this is right here. The market is accumulating. Usually, the market is accumulating usually happens during Asia session, sometimes during London session or New York session, but it's accumulating before high impact news also, by the way. But it accumulates, then it manipulates. Why? Because as the market is moving lower, everyone starts thinking, oh my God, this is actually moving bearish, short, and people get caught out. And then the market starts moving bullish, and this is when the actual move happens. But as that is happening, people are accumulating their orders, right? So the market is accumulating orders, moves lower, gets all of this sell side liquidity. So this is everyone that was longing, was putting their stops below these lows. So those people get stopped out. The breakout traders get in. So the sell stops get activated. It doesn't matter if it's the breakout traders or the stop losses. The bears start making money, and then the market can reverse. And at that point, everyone is already exhausted out of the market. Everyone is out of the market. Nothing is happening anymore. And that's when the real move happens. This is when all of the institutions have their orders filled. And then the real move can happen. There are videos of hedge fund managers actually admitting that they have to manipulate price because they need their orders to be filled. You need to understand that if you want to buy, someone has to sell. If you want to sell, someone has to buy. So the number one thing that institutions and banks have to do is they have to generate liquidity for their markets. And that's where this manipulation comes in. Because everyone starts thinking, oh my God, this is the time where the market is going to move lower. And then you see this reversal happening. Because all the institutions have been able to trigger people's sell stops, trigger people's breakout sell stops, again, stop losses and sell stops. They have been able to accumulate people that are now bearish. So they've been able to buy all of the positions out of these people that are selling. And now the real move can happen in line with the direction that they intend to, which, by the way, is always going to be the daily direction. Always, right? We will always see the power of 3 happening. Look, wick moves lower. There you go. Then the target has been hit, right? Same thing here. Before the move lower, sweeps the high, moves all the way down. Again, manipulation, right here, manipulation, followed by continuation to the downside, manipulation followed by continuation to the downside, manipulation followed by continuation to the downside. So can you see how the power of 3 is always happening? Same thing on the bearish. They accumulate orders. People have their stop losses above here. The stop losses get triggered. The breakout traders that are expecting something like this to happen get their stops triggered, their limit orders triggered, which is a sell stop. Then, which is a buy stop. Then the market starts moving lower. All of the buyers right here that had all the stop losses have been hit. All of the buyers that wanted to buy the breakout have now had the stop losses hit, and the real market can now move. The real move of the market can now happen. That's what the power of 3 is. It shows you how traders like retail traders get manipulated out. How many times have you seen, or how many times have you maybe been caught in this sort of manipulation where the market starts moving higher and you're like, oh my God, maybe my bias was actually wrong and the market is moving in this direction. So you execute in line with the direction counter to what you thought the market was going to do, and you just got caught in the manipulation. This happens a lot with retail traders. A lot, believe me, so much. And I see this with people that see, for example, gold moving lower a little bit and they think, oh my God, Armageddon is starting. And then the market just continues moving higher and higher and higher and higher. It's so obvious to see. It's extremely obvious to see. And once you see this, you will not be able to unsee this. Your trading changes forever as soon as you start understanding that this is always happening. In every single candle, you had manipulation before the move to the upside. Manipulation before the move to the downside. Manipulation before the move to the upside. Manipulation before the move to the downside. Manipulation before the move to the upside. This, all manipulation before the move to the downside. Right? Because this can also be on the daily. Right now, we're seeing the daily chart, but let's see the weekly. Manipulation before the big move to the downside, right? We can see this happening over and over again, right? Over and over again. Manipulation before the move to the downside. Manipulation, move to the downside, right? We can see this happening over and over again, daily, weekly. We'll see this happening on the 4-hour. We'll see this happening everywhere. So, the power of 3. What do we use the power of 3 for? We are going to use it to gain confidence in our bias, to not get caught in manipulation, and to have patience for good entries. So, gaining confidence in our bias. When we have a specific bias, the power of 3 strengthens the bias by understanding the way the market will move. Because a lot of traders, what they do is that when they see, let's say they have a bearish bias, if they see the market moving up, they think that now their bias is wrong. When in reality, this is going to make you gain confidence that the bearish bias is actually correct. Because if the market is moving higher, it's just getting people thinking that the market is going to move higher before it then moves lower, right? So that is how we are going to gain confidence in our bias. Even if it looks like the bias is wrong, it can all just be manipulation. Even if it looks like the bias is wrong, it can all just be part of the manipulating traders out. This has probably happened to you, where you see the market moving in one direction, you believe that your bias was wrong and therefore you have to change it, and then you trade, you lose, and actually your bias was right. So what I want you to do after watching this bootcamp, you're going to have all of the tools you need to become profitable in this exact bootcamp. You will be able to see the market moving in one direction and still be confident that your bearish bias is right. And we'll see this further down the line, that is exactly when you start executing, right? You will see me drawing this so many times. You will see me drawing this a lot of times, right? This is my entry, right? This is going to be our entry. This is the entry that is going to make you profitable. Power of 3, and then we'll see how we use it. And then you'll see how, by understanding the power of 3, you can get so much more confident in the market. Then not getting caught in manipulation. Traders get caught trading against their bias because they see momentum in one specific direction. Once you understand the power of 3, you understand that this is a market mechanic to get traders caught off guard. Gather liquidity and then move in direction of the daily time frame. So again, all of this, the goal of the power of 3, meaning the goal of the manipulation part, is to get traders caught off guard. Is to sell their positions to the buyers that are going to be the institutions. It's going to be to buy the positions of the institutions that want to sell, right? So once you understand the power of 3, this will not let you get caught in manipulation. And then it's going to give you patience and good entries. Once you understand the market mechanics, you can focus on the high probability trades that happen after traders get manipulated. Because let me tell you, one of the big things that I look for is, for example, and I'll tell you where we are going to use liquidity, where we are going to use power of 3. So imagine that we have London session. London session has just started, okay? Let me actually write London. So this is London session. What happens when London session starts? All of the London traders come in and they start putting their orders. So if the market starts moving higher, that means that the buyers are winning. The buyers are winning the bid and ask war, which means this is taking the market higher. So every single trader that got into the market and longed as soon as London session started, right here, they are making money. But that is exactly what they want. That is exactly what the institutions want. They want traders to be like, oh my God, they want the traders to be euphoric, thinking, oh my God, yeah, the market is moving higher, 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 higher. Market starts moving higher. They think they actually made money. People start buying. So buyers start buying out of euphoria. Sell stops get triggered. Stop losses get triggered. So the sellers now just lost money. So let's even write that here. In this case, let's do this. So in this case, sellers lost money. Buyers are euphoric. And now institutions can fill their orders. Why? Because as the stop losses get triggered, they are selling to these stop losses, because a stop loss is just a buy order, right? Because you sold, that means that to exit the position, you need to buy that asset back. So basically, as your stop losses get triggered, you are buying the asset and the institutions are selling it to you. For all of these traders that are buying this, the institutions are selling it to you. So they are selling to the people that have their stop losses. They are selling to the people that are buying. So their position is now getting stronger and stronger and stronger. And eventually they start moving the price bearish. So the buyers are losing money. The people that had their stop losses filled, they're out of the market. So the sellers are losing money. The buyers are losing money. And now who is making the money? it's the institutions, right? So this is what you have to keep in mind. That's why the power of three is so important, because it's not going to allow you to get caught out. You are not going to get caught in manipulation. And this is then when the good entries come. When everyone is out, when only the institutions are in, when the early traders are out, when the London traders are losing money, both sides are losing money. That's when you execute. That's when the high probability positions come, right? So now, when do we use the power of three? The power of three is going to be used in three circumstances: weekly and daily candles. So can you see how this is a weekly candle? We are just looking at this green one. This is the exact price section of that green one. It starts here. It finishes here. So notice the weekly power of three. On Monday, price really moves to the upside. What happens? Everyone thinks, oh my God, this is moving higher, this is moving higher, this is moving higher. They start buying, and then notice, we have this move up, everyone keeps buying, and then an absolute tank, right? So from here on out, you're bearish, because everyone that was selling down here is now at a loss, and they got their stop losses filled. Everyone that is waiting for this is now euphoric, and they are buying. So everyone is caught on the buy side, and you just take advantage when the market starts moving to the downside, because our bias right here is going to be extremely bearish, right? So you can see how everyone was manipulated on Monday and even on Tuesday, and then the market starts moving to the downside. And this is where the high probability and the very easy trades come, right? So that is on the weekly and the daily charts. That's sometimes when we are going to be using the power of three. Then we are going to use it on the sessions, because as I explained, sessions are a very easy way for us to understand the power of three. Because think about this. How many times have you seen in the stock market at 2:30 p.m. Lisbon time, which is 9:30 a.m. New York time? There are, no joke, people that go into the New York Stock Exchange and they press a button, and you hear the whole fucking how do you call it? The oh my God. Oh my God, I can't believe this. New York. So with the New York Open is this, right? Like, the guy pressed the button, it's now open, and now every single trader that is on the New York Stock Exchange starts trading. So this is an actual real life example. When the New York session starts, actual New York traders start trading the market. Ask yourself, who is making money and who is losing money? That is the most important question you can ask yourself to understand the power of three. Who is making money? Who is losing money? Because this is what is going to help you to gain confidence, not get caught in manipulation, and have patience. So we use this in weekly and daily candles, and we use this in sessions. So you can see this is as an example. This actually has two, where on a daily candle, what do we have? Notice, this is a very bearish candle. This is what this daily candle looks like. This is actually a full candle, right? So the market opens up, moves up. Everyone that shorted as soon as the daily opened is losing money. Everyone that is buying right here starts losing money, and this is when the easy trades come. Now, about the session. Notice, London opens. We have a little bit of a move lower, so sellers are making money. They get manipulated out. The market sweeps the high, so all the sell stops are hit. All of the breakout traders are executing their orders right here, right? So this is a breakout. So all of these traders have now their orders filled. So buys are stepping into place, sells are losing money, and then the market shifts. Notice this, fair value gap, respected, moves lower. Fair value gap gets respected, moves lower. So now, you no joke, in one image, I'm able to show you the daily power of 3 and the session power of 3, right? The easy trades happened after the London traders were manipulated and we started moving to the downside. So this is what is important for you to understand with the power of 3. And last but not least is with entries, because every single candle, this is a 15-minute trade, right? This is a 15-minute trade. I enter and I understand that there's going to be some sort of manipulation, and that is what allows us to set the limit orders or to have a better entry. So understand that our entries are also going to be based on the power of 3. But most of it, what I want you to understand about the market mechanics is that this is always going to be real in the markets. Traders are always going to get manipulated in the markets. Buy stops and sell stops are going to get triggered. Understand, please understand, this is real. This is not some wishy-washy things. You can actually watch it in the order flow, like on NASDAQ. You can actually see liquidity being swept, sell stops and sell stops getting hit, right? When we have a sweep of liquidity and actual like real orders coming in. You can see that with stocks. You can see that with futures. The power of 3 is real, and if you don't use it, you will be part of the traders that are getting manipulated, right? That's why the power of 3 is one of the most important things that we are going to learn in this bootcamp. Understand, the power of 3 is a real thing. The power of 3 is real. Institutions try to manipulate us retail traders. They try to, but if you understand this, you will always be on the right side of the market, and you are way more likely to make money from these markets. And so with that being said, the power of 3 is going to be a very big foundational point for us as traders to understand market structure, to understand liquidity, to understand entries, to understand sessions, to understand everything. The power of 3 is going to be there. This is why this is one of the first lessons, right? So with that being said, we're now going to build on top of this. So I will see you tomorrow, and I hope you enjoyed this power of 3 lesson on what the power of 3 is and how we actually use it. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.